me, Jeff, coming to you live from Tasmania in Australia. And we'll be waiting for Ash very, very shortly to join us, who will come to us live from Brighton in the UK. Trust you had a wonderful weekend and managed to spend some time with some family, some loved ones, maybe had a little bit of entertainment, a couple of beers, maybe. All those sorts of things that we normally do on the weekend. Hope it was successful for you anyway in whatever endeavours that you chose to pursue. Rightio, I'm a little bit dishevelled here, I've got to say. I've been chatting away in the background and when I should have been concentrating on the pound chart. So let's get into that, shall we? Ash and I got up to date with the journal on Thursday. I think we met late Thursday. And we are now formulating what we're looking for, which is a sweet spot. Happy Monday to you, Paul P, as well, mate. So we'll be giving you further updates on that, hopefully as the week progresses, if we get a little bit of spare time to look into how we've been, well, manually optimizing, I'll put it that way, the pound breakout trade. In the meantime, we will continue on the journey that we have been pursuing, and that, of course, is my old style, still my style, but on pound US dollar, it hasn't been, it hasn't really been tried until, well, the last couple of months, really. All right, so under that, guys, let us go into today's positions, and we are looking for a range here, of course. So you could say that the early range has been broken by that bar, but we're kind of back in there at the moment. That's one of the criteria that we've been working on, and have we got a range? Has it been broken? And I'm going to say it has. I'm going to say that range has been broken by this bar, although it looks to be coming back inside there at the moment, and that's going to preclude me from taking the trade today. It's an interesting way that we have been looking at this, and what we have discovered is if the range had been or has been broken prior to London Open, then why are we looking to trade a range break if the range has already been broken? It's just common sense at the end of the day, isn't it? But that's what's been proven by the research that we have been doing. So we'll continue to monitor that, but at this point in time, I'm going to say that the range has been broken, and potentially now we're getting lower lows, lower highs, lower lows. Don't know if we're going to get a lower high. That's probably it there, and potentially a lower low. We may go back into range. There's no guarantee of that not being the case, but if it's already been broken, we have kind of proven that it's not worthwhile doing. Church of God Singapore, Tampinis. Hello, Church of God Singapore, Tampinis. For pound US dollar, we have double crosses of double pivots. Any significance? Always significance. Depends on what chart you're looking at, but let's have a look at that prospect. No double crosses on the 4-hour chart. Therefore, we're talking about hourly and 30 minutes, I would determine. I better get rid of these before we go any further, otherwise people will be looking to follow those levels, and that won't be good because they're irrelevant. Speaking of Church of God, we've got Easter coming up next week, right? What are your thoughts, guys? Should we have a Monday show or should we have not a Monday show next weekend? Because it is Easter Monday, of course. Most people have a holiday on Easter Monday, certainly in Australia. We being a Christian-based society. Okay, now that's done. Yes, it has. London Open should be This is for Paul P. London Open should be in, what's the time? 8 o'clock, should be now. So London Open should be now. Let's check that with Forex Factory. Have I got a Forex Factory? Yes, I do. Okay, and we are in the last week, or last few days really, isn't it, of what is this month? March. All right, I've got to adjust my clock here, haven't I? Because I am on UK time. So let me just adjust that. Let me show you what I'm doing. That's probably a decent idea, isn't it? So Monday the 29th, 8 a.m. So it's 8 a.m. It's already adjusted. Or has it already adjusted? Doesn't normally automatically adjust, but I think that is the right time. GMT +1. So that means we are on GMT, daylight saving time. I'm pretty sure. Hope I haven't got this wrong. Pretty sure I haven't. GMT, let's go with London. And it's telling me it's +1 because it's now on daylight saving. So we are good. We are good, and London should now be open. All right, here's what's happening. 4 p.m. Aussie time. No, right now it's 6 p.m. Aussie time, which makes it 8 p.m. London time now that they're on daylight saving. Now, next week, if you're in Australia, that will change again because we have, guess what? Daylight saving switching off. So by my reckoning, I'll be another hour earlier because I'm an hour early today, right? No Monday for Gary. Good, cool. Nobody else has answered that question yet. I'll repeat the question. Next Monday is Easter Monday, and we are considering having the day off. Well, I'm considering having the day off. I haven't spoken to Ash on this. We'll have a chat about it in a minute. Is it actually a holiday around the world? Let's have a look at that. Next Monday, April 5th. Yes, it is. So it's a bank holiday in London, not in the US. Interesting. That is interesting. But it being a bank holiday in London, that's my very point. You know, the likelihood of me trading, and I would suspect Ash on that day, is very, very slim. So for that reason, and the fact that most people are on holidays, and it is Easter Monday, I'm preferring to have the day off, but I'm happy to work with the majority, as always. Righto, so let's go. Whilst we're here, let's have a quick look at what's going on this week, shall we? Because, as I said, I'm not trading the London breakout at the moment. April 25th has gone by. Where are we? We're at 20. What on earth is going on? We're in April, where it's March. Let me try again. There we go. Let's use this week, shall we? Because I'm pretty sure I'm not on holidays today, or Australia's not on holidays today. Righto, what have we got coming up? There's our daylight saving time shifts. As you know, Europe and everybody up there has now changed the clock, moved it forward. Well, I think everybody. Not everybody in Australia does that. OPEC meetings on Thursday. Everything else is kind of low impact or medium impact with the orange there. And of course, the big news of the week will be the NFEC number, or the NFE number, which used to be, of course, NFP. So there you go. Pretty quiet week. It is the end of the month, of course, and next week traditionally will be where everything starts to gather pace. And of course, it's a short week given that we have Easter. But they are going to release the NFE number, by the looks of things, on Good Friday, which is interesting. Be interesting to see what happens there. So it's all about daylight saving today. It's all about bank holidays on Friday. with the Easter break coming up. So a bit of a short week, really. Let's deal with that, shall we? All right. So we've got London breakout not happening today, as I said, because we have already had the breakout. If we were to have traded that, we would have been going short underneath that bar, and we would have been going long above that bar. So we will keep our eye on that, see how it pans out. But at this point in time, no trigger. Righto, I'm going to update a few things, not least of which is where I left you last Thursday. And those of you in the Telegram group would know that, and I'll explain it all to you for those of you who do not know how I trade. It's pretty clear. What we did was trade short. Was a daily bar. I think it was a daily bar we traded. Yes, it was. Okay, we traded short on those numbers on Thursday. No, we actually entered the market Friday, Thursday. Must have been Wednesday. Okay, so let's say Wednesday. I didn't realize that. And we didn't get TP1 on Wednesday. We didn't get TP1 on Thursday by less than 1 pip, 0.4 of a pip on my broker. Now, those of you who know how I trade will know that if that happens, I simply move my stops to entry instantly. Hi, John, how you doing? Which is exactly what I did, and I updated that in the Telegram group. And those of you who were in or are in the Telegram group would have had that trade management. So I'm out of that trade now. It doesn't say that I won't be looking to get back into it. So we got out of this at entry, so break even. Doesn't mean I'm not looking to get back into it, however. And it may well be the case that if we get a nice little weekly pivot bounce here and a bar that looks something like that one, we might even look to trade that short again. But as I say, if you know the way I trade and I miss TP1 by less than by less than 5 pips, really, I will move my stops to entry, which is exactly what I did. And as I said, I updated that in the Telegram group, where we do give you our trade management as it progresses if we're not in the shows. I have to cough, but I'm going to say, g'day to Ash. How you doing, buddy?
Hi, mate. Yeah, not too bad at all. How you doing, mate? Yeah, you okay? You go ahead and cough if you need to cough.
I'm going to cough. I'm going to do it right now. I'm just looking for the microphone to switch it off. My goodness. Hurry up, hurry up, hurry up.
Oh, yeah, there it is. There it is. There's a whole field of bamboo dust in there somewhere. Right.
Man, that nearly brought tears to my eyes.
Yeah, good. I could see. I could see, mate. I could
was welling up and welling up.
So
we're not trading the breakout today under our revised system, which of course is if we've had a breakout of the range which we had.
Yeah.
We're not going to enter the trade. So that's a no-go today.
Yeah.
And we're going to try and find a sweet spot, are we not?
What, in the breakout
over
trade?
the next week or so? Yes.
Yeah, and I think it might be one of those things that we end up, and you know, just so everybody's aware, Jeff and I have been doing some work on this in the background. I think it probably, while we were trying to do the work last year, during the US show, noting down the parameters was not really enough. I mean, we really needed to kind of like do something that was going to be way too boring to watch, which was sit and analyze the data and see what it was telling us. And we've done some of that. So we are starting to get a more rounded strategy with this. And it'll only get better. You know, I've got some other bits and pieces that I'm starting to download as well, which will help this strategy even more, which I will discuss with you in the coming days, mate. But what I think will probably happen is we'll probably get maybe 1 or 2 a week. I think that might be more likely from here on in.
I think so, yeah.
Rather and it might even depend. We might even get. I mean, there was one result that came back where there was 3 consecutive days, and that seems to be an area where things get really exciting. One of those trades was a 17% winner, and one of them was an 11% winner, and I think the other one was I'm not sure what the last one was actually, but it's not that those winners don't exist. It's one of those things that you can have 17% winners, but if you've only got one of them, then it doesn't really matter if you've got 19 losers. If you're trading at 1%, it doesn't matter you got a 17% winner if you've got 19 losers, because you would have to every single trade you'd have to aim for 17% to get that 17% winner. So it's this is where the analysis and the interesting dynamic of where you set profit targets starts to need to be properly analyzed, because it might be that we just get lots and lots of winners at 0.75%, and that's a better way to do it and miss those 17% winners. Or we might be better just to kind of go all out and say, well, let's see if we can get a 17% winner and lose quite a lot of trades. Or there might be a sweet spot, as Jeff says, where we manage to get a little bit of both. So there's quite a few different things that we can do from here. At the minute, we're just working on specific parameters and just trying to figure out, what is the potential extent of an uptrend here. Good morning, John. How you doing, buddy? Have we not seen you for a while? I think you were in last week, weren't you? But things been busy for you, mate? I think you've been keeping low. Okay.
There you go.
Okay. For positive reasons, hopefully. But anyway, that's the pound trade, and we'll see where we get with that. Shall we have a look through some of these other markets, mate? I know you probably covered.
Yes. But before you do,
yeah,
you may not have even read it in one of our groups. I think the Skype group that I posted about next Monday, and I asked the guys in here whether they would prefer to have a show next Monday or not. I'm pretty happy not to have a show next Monday, given it's Easter Monday. It's a bank holiday in the UK, so I'm all for not having a show next Monday. And it seems that nobody's saying that's a bad idea.
I don't think it would be a good idea. I think it would be. Yeah, I think. Thank you, Sweet. I think it probably would be an idea to take the day off, because the market is closed. I mean, the UK market is closed anyway, and I think it's just going to be quiet. I think it's going to be difficult to kind of get anything. Sunday's going to be, it's going to be difficult to kind of get the analysis done on the Sunday, so it doesn't really make much sense. Yeah, I think that might be fair as well, Jara. I think just having the odd day when and this is the thing, it's not like we're defining when we're having the day off. The bank holiday is defining when everything's closed, so it wouldn't really make sense for everybody else to be on the beach somewhere, for want of a better term, and for us to be kind of here sat doing nothing, mate, because there's gonna be very little to look through.
Yeah, look, I'll schedule a barbecue and put a few beers in the esky, mate. I think that sounds like a better idea for me.
Yeah, that sounds good.
All right. Well, we'll inform the powers that be that next Monday is going to be a no-show. Yeah,
sounds good, mate. That sounds good.
And let them all go out.
Okay, so let's. Hey, Lewis, let's have a look at some of these. What's going on with the markets here from my perspective.
You got it, Jara.
I always do that, don't I? So let's do that, and let's do this. So we'll start with gold, because it really, this is a really interesting one, mate. And you're a man for a range, and these are daily bars here. And so we're starting to head into a kind of 10-day range, a 2-week range, if you like, where gold is really going nowhere. I think things are getting interesting here. We're looking to see whether will gold bottom out, at any point. Is there anything that can be done to kind of promote some upside? But the bond yield is still plaguing gold. I wonder whether that Suez Canal story could start becoming quite interesting, for inflation. I mean, we've got the gold kind of picture is we know it's an inflation hedge. It's a way to kind of protect your money rather than putting it into a bank. Then people would maybe on a broader picture kind of go into gold, and because they know that as an asset it would tend to hold its value and if not go up in value, just like housing would.
Now, did you see the amount of boats piled up either side of that canal?
Yeah, it's crazy, mate. It's crazy, and they're talking about $9 billion a day being just wiped off but wiped off trade.
Wow.
So it's a serious situation.
It is loose now.
It's loose, but it's not free, is it?
I don't know. I just heard briefly.
Yeah, as far as I'm aware, mate, it's not free. I think they have managed to get it floating again, but it's like a phase 1 thing, and it's interesting because the Suez Canal is not wide, not as wide as these boats are long. So I'm surprised this stuff doesn't happen more in some respects.
Indeed.
It's not free to move yet. Okay, thanks, Lewis. Yeah, that's what I'd heard, and I think they say it could take another few days as well. So, but I say, mate, I'm going back to this story and wondering how does it affect things? Does that start to kind of impact inflation or not? I know that there are certain things over there that are jammed up. I think oil is one of them, and okay, we haven't really seen the Suez Canal like play out in the oil chart, but gold is obviously the one way that you protect it against inflation. But the broader picture still is about this bond yield, and it appears to be the case that the bond yields are going to be still potentially rising. It's not a zero-sum game, if you like, in that way. But bond yields will rise and gold will go down because they can both rise together. Because it's really about real inflation, that we'll be sort of focusing on. So I don't know whether this is a bottoming down here, but I still think it's quite interesting. Now, if you look at the weekly chart, you do get a slightly different picture. What I think is quite interesting is how the price action has held up here, and so we've seen it bounce once from this particular point to 1674. Now, I think that there is probably wide agreement that gold could come down just a little bit lower and still be in a decent kind of buy area, maybe 1550, something like that. 1515 looks like a very, very strong area, and I would say, I mean, I'm buying here. I've started to buy gold, but I would say that for me, the best way for me to play it, and this is the way that I'm approaching it, is that I'm a buyer of gold here, and if it drops, I want to buy again. So I'm trying to sort of dollar cost average, if you like, on the way down. Now, obviously, dollar cost averaging is a very toxic term, and I'm presuming that everybody knows what dollar cost averaging is, and if you don't, then just let me know and I'll quickly tell you. But the most important.
Andy.
Yeah, good morning, Andy, mate. The most important thing about dollar cost averaging, and the most important thing to understand about dollar cost averaging, is that you must use it with little or no leverage. That's the way to make it work for you. The problem that people have had in the past. It cut both ways. What do you mean, Lewis, with that? Oh, you mean it can be really good or really, really bad, really dangerous? Yeah, and that's the thing. I think that the some of the techniques that I've heard with dollar cost averaging is inevitable to return some fantastic results, but when it goes wrong, it's inevitable to be an absolute disaster because you put yourself in a position where all your eggs are in this basket. Now, that's not the way to do it. Now, if we think about as an investor of shares, if I do my research and my due diligence on a stock and I really like a stock, then this is where and I suppose this is why I quite like dollar cost averaging. But remember, when you're buying stocks, when you're actually buying and purchasing stocks, you can't leverage. You know, you can only spend what you've got. So if I sort of like see the price action doing this and I buy a stock here, now if I've done my due diligence on the fundamentals and I really like a stock because I think, you know, it's got a decent propensity to fix an issue, and it's going to be around for the next 10 years, and it drops, my first thought is, of course, I want to use technical analysis again, but my first thought is, well, I'm going to get it cheaper now. So, of course, I'm going to buy back in again. But the issue has been is that people will be buying and buying and buying and buying with leverage until it gets to the point where they're margin called, and all of these positions either have to get closed down, looks like an American football, or the one that is losing the most gets closed first. But this is where dollar cost averaging is it's a very bad technique. So if you use it like you would a stock trader, then it can be really positive, and it's you know, one of those things that you'd say, from here to zero, or wherever you choose to say that's the end for me, can only cost the percentage of your account that you've assigned to that particular trade. Now that percentage might be 5, or it might be 1. And if it is 1%, the first one has to be a fraction of 1% down to here, and the second one has to be another fraction of that 1%. But if it's 5%, then obviously you can, you can go in a little bit heavier. So I am a buyer of gold here, and the reason that I think it's good to buy here, and the reason I don't mind not putting the whole position on here, if you like, and potentially losing out if it pops, is that I'm invested now. So if gold does go up and doesn't come down, I've got my position in. But if it does come down again, I've got another area that I'd like to, to buy in. And if you like, that's the second half for me. Half one here, half two is down here. Now I might, as I say, only get half on. But of course I can, if it does start to trend to the upside, add that other half later. And the way that I can do that is that if it goes up high enough, I can make this one safe with a stop loss, and then start to add the second half there at a slightly worse price, but at least then I'm fully invested. So we can scale in, or we can average down, or we can average up. You know, depends what the market gives us. So I am in gold. The FTSE 100, I am, I've got a few positions that I'm kind of interested in stacking up here as well. And this is the same deal. I'm just dollar cost averaging this as well, a very, very low rate. And I think the FTSE's got a decent chance to go higher. I thought the NASDAQ was quite interesting, mate, towards the end of last week, and this is the problem with the NASDAQ. And I would advise anybody that if you have an approach with the NASDAQ, or if you have an approach to trading, and your approach to trading is long versus short, when you come to trade indices, adapt. My advice would be adapt your approach, because where currencies get caught in a range, you kind of like, you get this they tend to revert back to the mean. So if you want to go short euro dollar, then you've got an equal chance pretty much of going short at the high and getting a trade back to the downside, as if you have going long at the low and getting to the upside. With the NASDAQ and with some of these indices, it's not the same. You haven't got an equal chance of going short, because the NASDAQ, as we all know, tends to go, and all these equities tend to go higher. I mean, this is back in 2011, 2012. So 2008, since the financial crisis, that it's really just going in one direction. So for us to go short on the NASDAQ, we must have a shorter time frame. So we've got to take advantage of a shorter term move, which means that we should really only trade indices short when there is high volatility. If there's low volatility, then you could get caught in all sorts of trouble, because what we're looking at doing is trading short term on this stuff. We probably want to buy it and close a position, because what will tend to happen with the NASDAQ, as we've seen over the course of the last week, is it comes down and bounces back. It comes down and bounces back. It comes down and bounces back. I mean, it hasn't gone quite as far here. And I'm not saying that this won't break down, but what I'm saying is you're probably better off. And I say probably because you might have an approach and a strategy that doesn't involve doing this, but you're probably better off going sell here, close somewhere around here. Obviously, you're not going to get the extremes. Sell there, close somewhere around about there. Sell there, close somewhere around about there. Sell here, close somewhere around about there. Sell here, and close somewhere around about here. Rather than trying to sell here and see if you can get a massive move to the downside, you're better off just chipping in, you know, just taking advantage. While the Nasdaq's weak, sell it and buy it. So sell it and close it, sell it and close it, sell it and close it, just in case it does pop to the upside. And that's the best way to protect your account if you're going short on something. Going long is completely different because the direction of travel is up. So with when you're looking to buy something like in the Nasdaq, you're better off buying here and holding, and 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 then getting taken out, you know, on all positions or just one position. That would be entirely up to you. But yeah, when it comes to the downside, completely different approach. So what's going on with the market right now is just a little bit of weakness. And the issue is now, if we mark this off, let's have a look what we've had. So that was really when the downside started there. We've had a down move there. We've had a down move here. Now I would want volatility if I trade the Nasdaq short. Now the Nasdaq's got its own volatility index, but the one we've got on this particular MT4 is the VIX. So what we want to see is the VIX going in the opposite direction, and we can see with the VIX there was an up day here, so I'd want that in agreement with a Nasdaq short. This one looks pretty good as well. When we look at the VIX here, looks like it's down to a low and it's at a hold point, so that did generate a short. And then we've had 1 day of upside here with the VIX here, but it started to slow down a little bit. You know, this is quite an aggressive looking pattern here. This is brilliant here, but this is quite an aggressive looking pattern. That was still quite elevated, but it's starting to drift a little bit now. So this is kind of saying those shorts might be a little bit dangerous. You know, they're not quite as simple probably as they were. Yes, we're seeing the VIX pop to the upside, but it doesn't look like it's on particularly high motivation and high momentum. So we want to run it in with the VIX. So let's finish up by just having a look through some other bits here, mate. I wanted to look at Bitcoin, which has popped again to the upside at a very interesting level. Sell zone on Bitcoin. Bitcoin goes through here and closes above with some volume. You would expect Bitcoin probably to also stabilize, and that's all I could really call for right now. I don't know if it goes too much higher. It might look better if this becomes a neckline here and it pops back into this space and gives us that inverted head and shoulders. It's still not my desired area on Bitcoin. You know, where I've kind of started to buy up with gold. It might have been the wrong choice for me, and I'm still undecided on it. But this would have been a good place to start buying Bitcoin, and obviously it looks like it here. But if we look at the actual charts here with Bitcoin and mark off what that low is on the broader kind of picture, we kind of do have. Well, it's a bit scruffy here, but well, really, this horizontal level here. I don't love it. You know, it is a little bit scruffy. But if we think about market structure, if we think about kind of price structure, then where this one came from was that, you know, this break here. Or this move to the downside is really testing the resistance point. So it came up and it came down and then it shot straight through. So it's kind of coming down and testing that resistance point. So this is looking like a continuation pattern to the upside. So we probably should, or I probably should have been a bit more alive to this, and I probably should have bought in the products that I did want to buy in at this particular point. But that isn't where I wanted to get in with Bitcoin, and I'm less committed to Bitcoin as I am to gold for whatever reason. where I'd really like to get into Bitcoin is here. That's where I'd like to start my positions at 45, and potentially even a little bit lower. But I wonder, maybe we've had it. I mean, it'd be interesting to speak to Shukri tomorrow and see what he thinks. It may well be still. I mean, for Bitcoin to do anything slowly is a huge surprise to me. But it might be creating a head and shoulders pattern up here, and maybe it's doing it slowly. So it's possible that we still get this. We might still get a test of this neckline one more time, and that's really all I'm after. I'm looking for one more test of this 45,000 level before I start buying into it. But as I say, whether I get it, I don't know. I mean, it's the fundamentals of Bitcoin are still slightly elusive to me. So that's Bitcoin, mate. And what was the other one I wanted to?
You're not Robinson Crusoe there, I'm sure, mate. The fundamentals.
No. Well, I'm a bit frustrated, mate. I mean, it's I've been watching this stock for a while. I've told you about it before, Argo Blockchain, and there was an opportunity to buy it at £2, but because I've got this kind of £1.60 in my brain, I didn't scale in, and I should have. I think I should have scaled in. It popped up 15% the next day. As soon as we saw Bitcoin do this. But that might be a bit of distraction. It might be a distraction. It's a difficult balance, isn't it, between patience and for want of a better word, procrastination. It's a difficult balance to kind of to always make.
Well, and in particular, if you're in I'll call it a genre or a sector that you really have no experience in, it's a new ball game, entirely new ball game. So you can take as much experience as you like into something that's new, but you're always going to be that little bit doubtful until such times as you've got some sort of track history with it or track record with it. I would have thought, because you can't have full confidence in it, and that, as you know, is very much a strong part of being able to trade successfully. Is you've got to have confidence in the whatever system that you're using to trade. So it is difficult in that regard.
Yeah, it is, mate. I think some of it is just kind of sticking. Really, I should have stuck with the same plan that I tend to use. But Bitcoin is just one of those things, and cryptocurrencies are some of those things that, because it's so volatile, I always think there might be a better opportunity around the corner. So I'll wait that a little bit longer with them. But the way Bitcoin's been performing, then I should have maybe looked at it slightly differently. It's not through this trend line, and this is interesting because these are my favorite head and shoulders patterns. These are brilliant head and shoulders patterns, and the reason they're so good is that they have a double area. You've got the left shoulder. Sorry, you've got the right shoulder, which is the area I'd like to get into any instrument, and you've got a trend line. So usually this would happen, not usually. It's got a good chance of that happening. So when I look at head and shoulders patterns, I really like to see it through. I really like to see when the right shoulder is through a trend line, because it's really clean and there's confluence, and also you got this high up here as well. So there's a lot to like about the downside. Coming into the downside here. But in saying that, I can see why this would have been a buy zone. And by now, really, this could have been This could have been a break-even trade. It could have been stop loss could have been put in place, and no big deal. And maybe we stay in the trade and it continues higher, or maybe we get stopped out and still get that better entry, but completely for free. So I think that might have been an error just there, on that, and it's one that I hope I don't rue in the future. I hope I still get the trade that I want with Bitcoin. Now, the last one I want to talk about is oil. Again, oil's doing something similar in some respects. We got a break of a trend line, and we got a right shoulder kind of coming up here. So it's another one that looks like a decent pattern for some downside. I've got a little bit of a problem with trading oil short. But it has had a particularly good run to the upside. And if oil is, or if anything is justified in coming down, it probably is a Bitcoin and oil. When we look at what's happened with oil, that the move has been aggressive and parabolic and all those adjectives that you want to use for it. And it would
It's not the only thing, though, is it? There's been a lot of that going on. Pound pairs come to mind. You know, we've seen a lot of big moves and fast. And it does tend to put you on a, this is really interesting, but can I trade it now? It becomes or you get into that, what I call NLNS zone, which is no long, no short. You've just got to wait it out until you get either a reversal or a massive, retracement. And that makes trading a little bit tough.
Oh, mate, what a great way to put it. Yeah, no long, no short. Yeah, I completely agree. It's definitely the case. You sort of, you've kind of got this, this crossfire area, and you're just waiting to know what it is that pushes it down. What I thought was interesting with oil is that when the inventories came out, it didn't really go anywhere. In fact, it did come down, for a while, but then it popped straight back up again. And it's that kind of thing that I think we need to be able to say, okay, so we've had the reason that the market should come down. We've had the reason that it should break to the downside, but it hasn't broken. So it's not that reason that it's going to break. Unless the inventories continue to grow, of course, or it almost kind of like is a developing story when that kind of thing happens. But if it's not going to be, if that's not the reason it's going to break to the downside, my first thought is, well, it's probably safe to say we should be looking still for buying opportunities. Rather than selling, even though I think the price action on the sell is much more attractive because of this head and shoulders pattern, as I say, and because of the well, it's not only a head and shoulders pattern. Look, it's a break of a channel as well, which measured move would come to. The measured move on the break of the channel comes to this $52. So that's where I'd really like to see oil. But because it's a no long, no short, as you say, mate, I'd almost be more comfortable, because somebody was asking last week about going short oil. And it almost sent shivers down my spine in a way, because I'm just kind of like, I'm not sure I'd feel comfortable going short oil, even though they're right. They're absolutely right. If you're going to trade these markets in both directions, then oil's a great candidate for a short. But because of the no long, no short kind of thing I've got here, I'd almost prefer to say, if it goes short, I'm going to use it for a decent buying opportunity. I wouldn't scale into this area, but I would at 52 and a half, 52.50 looks like a decent area for me to try and trade oil. So that's really what I'm looking for. I'm looking to see whether there's a buying opportunity that might come to fruition here. So that's what I'm doing, mate. But that's really across the board. That's where my head's at. Gold, just caught in a trap. But I'm interested to see if it can break to the upside. And I wonder with gold whether it has now got quite as many issues as with these trend lines. It doesn't. And the good thing is with this is that if gold takes out this area here, if it takes out this high and closes above this high, it's also going to take out the trend line. Now, is that trend line, what's the pattern on the trend line? Probably a broadening pattern because of these lows down here, or maybe it starts in a different place. No, it probably is that. It could be a falling wedge. But let's use it as a channel, because it will be a bit more conservative with the measured move. And the great thing here is, and that would get us right back up to around about 1860. So back to these highs here. So if I mark that off and have a look at that on a weekly chart, that brings us back to this horizontal level, which looks pretty good, doesn't it? Yes, you've got this one down here that might get caught in, but with that kind of thing, if it breaks out, it'll probably retrace from here, and then maybe it might be safer to pick this one up on retracement. You know, get some of the position in on breakout, and then some of the position on the retracement. But if this does become some sort of bottom down here, then we're just waiting for the break to the upside. That's the cleanest way to trade this. You know, we don't have to do anything. What's great about this is that we've got something to watch and that we're in front of. You know, these channels are brilliant. You know, these points of contention, if you like, where price is bouncing around, and it's no different to the breakout trade and the breakouts, the pound breakout. You know, we do the same thing here. Look to find that channel. Look to find support and resistance from high to low. Know where it needs to close above, and if it does close above, then we know which direction we're going in. But, you know, we can still make the trade safe. If we get a close above this area, well worth buying the breakout and putting a stop somewhere at the lows or somewhere within the pattern, because we're still going to be at a 1% or 2, you know, whatever percent risk or 0.5% risk to try and get to this point up here, you know, if we're using that measured move. So that point up there is around about $10 up, sorry, $100 up. And that means that even if we put our stops at the lows, you know, it's still a 2-to-1 there. So keep your eye on gold. That's the real message here, is keep your eye on gold. If it breaks the downside, then you might also feel comfortable trading it short. I don't think I would. But if it breaks the downside, you could be comfortable trading this one short, because again, you know, that could come right back down and test a lower level of that, and possibly come beyond. You know, we're looking at 1550 possibly, which is another 100 and whatever, you know, $170 short as well. So gold is a really good one for me, mate. I just think that it's a really interesting pattern, because we were in front of this one. You know, it's not trending yet, just waiting for that to happen. So I'm keeping my eye on it. Should have really brought in silver as well, because silver is volatile, and it's a really good one for day trading. And this one is really on the move. Looks like
I've been looking at gold because I've sensed the frustration in Ainsley,
yeah,
being unable to get into any sort of well, for obvious reasons. She likes to trade gold when it's trending, obviously, and it hasn't been doing that the entire month of March. So I've just been having a look at it on the hourly chart to see if I could have even helped her to trade it in a range, and it's not a clean range either, really. It's a bit all over the place.
No, do you know what? I think it's one of those things that you know, we all have our strategies that we follow.
Mm-hmm.
Sorry, is that me, Angel? No. Oh yeah, Angel's. Okay, it's for iPad. That might be his name, Angel. He might have got it changed by Depol. Yeah, but so maybe he's a real Apple fan. iPad, yeah, change your name, buddy, so we know who you are, so we can let you in. We kind of we're trying to keep names that at least sound like names that you might have been christened with.
No.
Oh, iPad. No, iPad. You are welcome in the room. You are more than welcome in the room. Just change your name just so we can see who's in the room. So where were we? So yeah, we go. So what I would have thought with the gold thing for Ainsley as well is that you know, Ainsley's kind of like experienced and professional enough to know that eventually the strategy will work out, and it's difficult, isn't it, mate? When you're sort of like, when you're a trend trading strategist, if that's the right term, it's difficult because inevitably you want to get in on the first move, but sometimes these things go into a range and you trade it and it doesn't go back in the range. You trade it because before the range is genuinely established, you don't know where that breakout's going to be. So you know, ranges are killer. They are an absolute killer for trend trading strategists, and it's whether you kind of like manage to get the first move or whether you take the second move and you know, diminish your returns. But if you're trying to get that first move, then you can get caught in quite a few trades and get cut up a little bit as you're trying to get trying to get the start of the trend. You know, as things do remain in a range, and you know, looking at this on silver, this is quite a nice example here. look at this with silver. If you'd got into silver, really you want to try and get this position here. And it does kind of, it pops out quite nicely. It pops out of a little trend line area, probably there, you could say. Pops from this this low here. So you'd really want that. But what that means is that you could be risking potentially this actually forming a range and coming all the way back down to the bottom again. And I think what's happening right now is that Ainsley's having to risk, these things happening because she wants to get the first move. She wants to get what her setup defines. But this is the thing about trend trading setups, is that they just won't work when the market starts to range like this. And I suspect she probably wouldn't want to trade the range. I would have thought she
doesn't.
Yeah, she probably just wants to wait until what she needs to see is available.
I'll continue negotiations with her, but
yeah,
I can't give her anything positive, and I'll show you that when you're ready.
Yeah, let's have a look, mate. Let's have a look. Let's continue on gold unless you got anything that you're going to trade.
Well, I do, but they're not tradable at the moment. Very quickly, as you know, I'm going back to my old stomping ground of trading the euro dollar on the 30-minute charts, early London session, not the first candle, but they're on, and I'll share that with you in a minute. But you're entitled to trade gold there, one would have thought, as a higher low after the initial, in fact, 2 rallies, I suppose. Almost an aversion point, I would have thought, on gold. In fact, it does look very much like an aversion point to me. But the interesting part here, it didn't go on with it, and it did go into range after looking very, very promising with that breakout, I would have thought. And, with the aversion point trade, what you're looking for is this to go bang pretty quickly. Just hasn't happened. And I think that's what's confused quite a few people as to why that hasn't occurred. But if you look at that range, and the way I trade ranges is pretty simple. There's no mystery to it. Once I've found that we have gone into range, and generally I always use the same method, which is find 2 equal highs and 2 equal lows. Look, they don't have to be opens. They don't have to be closes. They can be either highs and lows, opens, closes, don't really care, as long as they make sense. And all I could find here really was this, or these 2 lows. So a swing low there and open close low there. 1 high there, very close to a high there. I'm prepared to call that a high. So that's where my range began. Here, I can't trade in here until I've actually got that range established. Once I've got that range established, then I'm looking to trade it from the top to the bottom. And as soon as it goes to the top, as soon as it goes to the bottom, then I'm looking to trade it back to the top. This is an hourly chart, and I don't want to be trading too much lower than that on gold because I know how volatile it can be. So really the only opportunity I would have here is to look for a lower high coming off that top, which we got. But which bar you're going to trade? Probably that's the best of them there, the absolute high. But it's got a fairly big body, so maybe you would, maybe you wouldn't. But it's certainly the candle style that I like. That's got a white or a bullish body with a high test bar. So I'd certainly be looking at that. And that really did play out, I suppose, to a certain degree, but no chance to get into the long from my point of view, because there is a little higher low there, but it's a white bodied candle, not for me. You don't trade them. Coming back the other way, you're looking for a lower high, didn't happen. Coming back this way, you're looking for a higher low, did happen, and you might have got some money out of that. Coming back the other way, you're looking for a lower high, did happen. You might have been lucky to get a TP1, but otherwise that's a loser. Coming back again inside, you're looking for a lower high. It didn't happen. You're looking for a higher low. It did happen. You would have made that probably a winner. But, you know, there's very, very scant and few opportunities in there that are decent that I would even consider trading. So, you know, gold for me is just not an appealing thing to trade, even when it is in a range, because it's just not giving me what I want, what I need to see. So I really can't help in terms of how you trade gold at the moment. So I'll sit on the sidelines if you like.
Yeah.
Here's what I do want to trade though. On the 30-minute chart, I want to trade euro dollar long, and the reason I want to trade it long today is for this reason. We are at the bottom of a channel. We've got a little bit of a horizontal level through there as well. And on Friday, we did get a little bit of a bounce off that. I'm looking for that to continue. Now I see the weekly pivot above us at another horizontal level. So that makes sense to me to trade it to there on a small time frame. The problem that I've got at the moment is I don't really have a setup on the 4-hour chart. I've got the bounce. I've got a higher low. Sorry, I've got a higher high. I haven't yet got a higher low, and certainly not a candle that suits me. That needs to be black, remember, not white. On the hourly chart / the 30-minute chart, this will be the perfect setup if I get it. Well, when I say perfect for where we are currently situated. I've got to see this close above the trade line, maybe even decisively above the trade line, then come back and test the daily pivot or retest the daily pivot and the trade line. So the confluence area. I've already had a little double cross of the daily pivot there. And I've got to go back to that double cross question that I didn't finish either. I'll go back to that a little bit later. So right now, even on the 30-minute chart, I'm waiting for that retest. So playing a very, very simple ABC, if you like, on the 30-minute chart or the hourly chart. 30-minute chart is a little bit indecisive on that break at the moment. I'd like to see, yeah, it's probably too late to see what I want. Oh, no, it won't be too late. If we get a close down here somewhere, I'd still be willing to trade it. But I'd much prefer to see now the hourly bar close up here, then get the retest with a nice decisive selling bar. That would get me interested in trading it long. Probably already got a shape about it that I like, a little bit of a double bottom, higher high, higher low, higher high, higher low, and now it's gone into a little bit of a confusing state. But similar to what I just showed you on gold, on the, was it the daily chart? Maybe not, maybe the 4-hour chart. Yeah, on the 4-hour chart, where we've had a descending and quite rapid descending market. Then we hit the bottom, came up and matched the previous high, then came back and gave us a higher low based on the base, or based on the bottom, if you like, even in inverted head and shoulders there in a funny sort of a way. So take that in your mind. A retest of that former lower high and then a clear higher low. So that's kind of where I'm at with this chart as well. So big fall down, not quite matching that previous, well, although this one has matched that previous high or very, very close to it. And now we've come back and potentially put in that higher low that I was talking about. So I'm willing to trade this long at the moment, again, based on all of those things that I've just discussed. But these candles don't suit me. I want to see this break, maybe close above here, come back and give us the retest. Then I've got the right to go long. And I'd be happy to do that. So that's euro dollar. My analysis this week began with euro Aussie. Actually, I'll do it in reverse. It was
Sorry, mate, is the oh yeah, I was going to say is the on the half hour is the last candle broken through, but it hasn't quite, is it? Oh, yours looks complete.
Yeah,
the hourly. If you look at the half hourly,
which I have, yeah.
Is that the half hourly? Mm-hmm. Oh, that one. Yeah, I was looking at that previous candle, but it hasn't quite broken through there, is it? It's just right on top of it.
Yeah, no, I couldn't trade that.
What if this broke below? What if this half-hour candle then ended up breaking down and closing under the daily pivot? Would that then be a short for you because it's trying to get through?
No, it'd still be looking long.
Okay.
Definitely still be looking. In fact, if this closed down here somewhere, I don't like trading at the high there now, but
Mm.
that's why I'm kind of off the 30-minute candle at the moment, because
Yeah.
it's not giving me what I want, whereas the hourly probably will. Well, certainly if it comes back, it will
Mm.
give me what I want.
Yeah, I quite
So,
like that. I might trade that with you.
well, we've got to get them. We'll get it doing the right thing first, I suppose. You could
Yeah.
even, and is that how we traded the Aussie last week? It is. I'll point that out to you as well. Not that, not that was a winner yet. And those of you still in it may regret that you're in it at the moment, but you're still in the game. So here's how I like to trade these. Not in perfect context here, because it's better. It's always better if it's a retracement, and this really isn't a retracement. I wouldn't have thought. You'd be better off going the other way. But anyway, that clear break, that candle there that's broken that trade line, which is also the neckline of a Head and Shoulders. And of course, always the best way to trade those is as a retest of that breakout. But this was kind of a double whammy for me. So that decisive break of that trade line is where I like to pick them up. Again, as I say, not perfect context, but with this one, it's going to be very, very similar in that it's got a decisive break with a dominant bar, which is what I call it the dominated trade. If that were to be that way, then I would consider trading it. The only problem I've got here is I've got to trade into the high of the day with that, and that becomes an issue for me as well. But I'm certainly looking for the long here on euro dollar at the moment, and we'll keep looking at that. Going back to dollar CAD. Now, dollar CAD, as you can see, is bouncing off the bottom of this range, which is fairly substantial. And that's not surprising for dollar CAD because it does like to range. But this is also perfectly clear to me that this is going down, but maybe not yet. Big double top sitting there. It's the most dominant feature on this chart, as far as I'm concerned, is that double top there. And I'll be stunned, and I've been stunned many times before, so don't take that as, okay, it's got to happen. But I will be stunned if, let's say, by Christmas time, we're not down here somewhere. I'll absolutely be stunned if that's not the case. That doesn't mean I'm going to put a stop loss up here and put an entry down here just yet, because I don't think that's quite the way to go, although there would be people that would argue with that as well. And I don't have a problem with that. It just depends on your appetite for risk and whatever floats your boat at the end of the day. But right now, I see it going in completely the opposite direction. So I see this as a buy. Oil's going to have a lot to say about this, I would imagine. So if oil continues to rally at the rate it has, then this is going to struggle to get long. And maybe we are looking for a break out of that range. And if we get a retest of that, then it becomes interesting to the downside. But at the moment, it's interesting to the upside for me. And this is the weekly chart I'm looking at. We've got a monthly pivot sitting there. Daily chart, I'm looking for a higher low based on this big bullish engulfing bar. And if we did get that higher low in this vicinity here, then we've got a nice little head and shoulder sitting there as well on the daily chart. So left shoulder, head, right shoulder down here. So it's a little bit tricky right now. I'm biased long, medium term, or short to medium term, but the shorter term is telling me I've got to wait for this higher low, and it's not there yet. So if you want to trade that, then look for a short on a small time frame. I'm okay with that. You've got a little double top sitting there. So a lower high here gets me interested in trading down to the pivots maybe. And that is probably where weekly pivot area is probably where I'll look to pick up a long, as I said, based on even beyond the weekly pivot. Actually, it's got a fair way to go, hasn't it? Maybe I could reassess that and have a look at the bigger time frame. Still a double top potential forming here. So on the bigger time frame, maybe down to the daily pivot, lower high, then we can look at that. So it's not going to happen anytime soon, I wouldn't think, unless you can find a way in on the hourly or the 30-minute chart. But completely conflicting directions between the weekly chart, the daily chart, 4-hour chart even, and the hourly and the 30-minute chart. So it's a time for being careful there. But trading the range, you know, on the bigger picture looks perfectly simple to me. If you then look at the range inside of that, and you can pick out two tops here pretty easily. Two bottoms. Have we got two bottoms? We could go back even to there, I would think, and pick up two bottoms. There's one there, there's one there, or there's another one here if you like. So this then becomes a pretty simple formula for me. If I get a lower high sitting in here with a nice bar that looks maybe something like that, or even better, something like, goodness me, I've got to find one. They don't exist. Something like that would be okay. Something like that would be okay. Sitting over here, then I can trade that, and the daily pivot looks like an obvious target, bottom of the range weekly pivot. And if you want, look for the breakout and retest. You can get in again and trade it back towards the bottom of that range. So that was my analysis on dollar CAD. A little bit conflicting, but these two are the next, and I really was keen. And for the second week in a row, it may have got away on us. And I'm talking about Aussie Kiwi. But here's how I came to the conclusion on Aussie Kiwi. If you look at last week, we were looking, I think it was Euro Swissy, maybe not Euro Kiwi, but we were looking at the two bars. Was it Euro Swissy? Daily chart. No, it wasn't. Might have been Euro Kiwi. Euro something. Anyway, let's concentrate on this chart where we've got the big reversal potential. On the weekly chart, it looks even better. You know, that big reversal bar sitting there coming off the bottom of that ascending channel. And we then went into range. So no follow through at all. And we went into range for what, 3 weeks or more. And then we burst through the top of the range and found resistance, obviously, somewhere here at that level, let's say. And now we're bouncing off that. And this looks, for all intents and purposes, as though it may set up as a false break of that area. And I'm fine with that to trade it back down to here. Again, maybe pick up that level before it goes long, if it's going long and reversing. But the interesting part about that, and I want you to keep that mental picture in your mind, big reversal potential, consolidation, massive break of consolidation. Compare that to Euro Aussie on the same time frame, the daily chart. Bigger bars and more decisive break or potential reversal here with a big bullish reversal or bullish engulfing bar, followed up by one even bigger, then a massive retracement, barely, but it is a higher low. And then you'll be expecting that to just skyrocket, but it didn't. Remember, consolidation in here, go back to the Kiwi, consolidation in here, burst through, absolutely smash through the top of that range. Euro Aussie, not so much. In fact, it's now back underneath and inside that range, whereas Euro Kiwi absolutely is not. What do I conclude from that? I conclude from that the Aussie is a far better conveyance than the Kiwi at the moment, certainly against the Euro, but I think you find that across the board. And whilst I was interested in trading Euro Kiwi short or Euro Aussie short based on a false break, the Aussie now, or Euro Aussie now, not looking so much like a setup because I need a bull bar here. But if you put those two together, you've got to be saying the Aussie is a better conveyance than the Kiwi, and therefore turn to Aussie Kiwi and look for longs. Now, very, very difficult without a retracement for me to get long. And you remember last week that it was also the same thing where we had on the Thursday, the breakout retest on the Friday, and then, was it Wednesday, Thursday? I can't remember. And then the breakout on Monday, or was it Tuesday? Tuesday, Wednesday, Thursday. It was Monday. Right. So if this happens again, it's going to be the second week in a row that actually goes on, and we won't get a chance to do it. So I'm really sweating on a retest of this weekly pivot so that I can actually get into that move. But I'm very, very keen on trading Aussie Kiwi long. Now, just as a heads up, Was that all? Euro, Kiwi, Euros. That's really all I had on my watch list at the beginning of the week. We'll go back to the Euro now and see if we can find that set up for us. My goodness, that changed very quickly. Interesting. Now I might have to have a look at the 30-minute chart, mate.
What of the Euro?
Mm.
I thought it was interesting. Yeah, I thought it was a really interesting candle, that one.
Yeah, but you might have thought I'd want to trade that short. I don't. I want to trade it long, and now it is the high of the day. It's taken out the high of the day. So I'm okay to go long here. It's a terrible bar, however. How else can I do this?
You can always ignore it, mate.
I can and probably will because I hate it. It's horrible.
Yeah.
But that said, if I'm really clever here, and I don't suggest you make a case for something that doesn't exist, but I do have a case for that. In fact, I've probably got a better case for that than I had before. See, that is a slingshot setup. Okay, we're going to trade this. Where will we trade it? 30 or the hourly? I think we'll trade on the hourly because that's where the setup is. Oh, no, they're on both, really. We'll trade it on the hourly. We'll trade this bar here. So I'll give you the levels. The entry will be at, and I'll write this down. Entry is at 1.1794. The stop loss is at 1.1777. TP1 so at a risk of, say, 17 pips. $1.1804 is TP1. Okie doke. I'll place that trade. This is counter trend, guys, so you need to not be trading this at full risk. I'll trade it at 0.5%. I will put my entry here at 1.1794. And my stop loss will be at 1.1777. Okay. And TP1 is there pretty much just before the top of that bar. Okay, TP2, pretty clear. You want it probably at the DR2 mark, just underneath the weekly pivot. Or if you want to, you get a little bit more ambitious, you can go to the weekly pivot. I would probably look to leave something open because if this does do as a range trade would do, it could well finish up over here. So I would leave something open for that. Okay, that is euro dollar. I had to go back, didn't I? And have a look at the double cross question. Pound. I'm not sure I finished with that, the pound double cross. Oh, look at that. We decided to trade not trade the breakout, Ash, and it would have gone to TP2, I think.
Perfect.
Sometimes that's going to happen.
Yeah, it will happen. Yeah.
So 18 pips, yeah, would have gone to TP2. Anyways, regarding the double cross on the hourly chart, that worked. On the 30-minute chart, would be the same, I'm sure. Actually, no, yeah, the double cross happened here, really. Here and here. That wouldn't have worked. Bad time of day to be trading there, for me anyway. So I don't see any double crosses. For those of you who don't know, and this is not a perfect example of them, but it is indeed a double cross. When you've got a bar, in fact, it's not a great decisive bar, but that's what I like to see, a decisive bar that crosses like this. It's not even perfect either, but it's kind of where you're at. Big break, big reverse, response is what I'm looking for, and you trade above it. But it's got to be 2 bars consecutively, and the best way to do it is the first double cross, not the second. That one kind of is the same. That would have worked also. But yeah, I really couldn't say that you've got a double cross on anything but the hourly or the 30-minute chart. Maybe that will happen on the 4 hour later in the day where you get one up and one back. I don't know. But that's looking like one that might have got away. We'll see. No other questions? Looks like a ST short is on the card for euro dollar. ST. ST. What's ST, Lewis? Short term, okay. Acronyms, they get me every time. Short term short. Okay. I don't see that at the moment. Well, as far as a trade is concerned, and I guess I should explain that. When I'm talking more about what I see as a trade rather than I see as a potential direction, I suppose. They can be one and the same thing, but not necessarily. If I don't see a trade here, in other words, I trade setups. If I don't see a setup here, then I don't take the trade. Although my bias at the moment, because of what I went through before, the bias is short to medium term long because I've hit the bottom of that range. But if I go to the bigger picture, I think, as you would expect, right, we've had a bounce off the monthly chart. That could well keep going. But again, you're looking for a pullback at the moment, maybe to the top of that range, which would give you a head and shoulders over time, would it not? So that will make sense. But right now, I wouldn't be trading that short for love nor money because it's already gone that distance. I'm looking for a pullback here. And this structure gives me that opportunity for the bounce off the bottom. So I'm not necessarily saying that I'm a euro bear against the dollar. I'm certainly not. But bull, euro versus the dollar. I'm certainly not. But over time, I probably will be 2 or 3 of those things. I might be a bull, I might be a bear, I might be a bull, I might be a bear in the next 3 weeks. It'll all be based on what the market structure is telling me. So I'm not necessarily talking about at any given time my directional bias. I'm talking about, is there a trade set up there or isn't there? Because my directional bias longer term is most definitely short. But at the moment, I'm looking for this to go up here. I hope that doesn't confuse you. But that's kind of where I'm at. I can chop and change throughout a day, much less throughout a week or a month or a year. What is my view on Euro Swissy? Well, I was actually looking for Euro Swissy to come back inside this channel, Gyra, but it hasn't. It's rejected all attempts for that to happen at the moment. there. Maybe this has another crack. I'm not too sure. But if I'm an honest old chap right now, I'm saying, gee whiz, this looks good for short, potentially. Not now. You can see it's come back underneath that trade line, underneath the daily pivot, underneath the weekly pivot. If I were to get a retest of one or all three of those, it would be very difficult for me not to trade that short. Very difficult, but not right now. I've got to wait for that to pull back on the 4-hour chart. So that's where I'm at. Having said that, if we fail to get back underneath here again, you've probably got to start thinking that we're going to trade this range, and that looks appealing to me also. So I could be I could be going either way here. At this moment, if I get a retest, I'm going to trade it short. But if it doesn't happen, it doesn't happen. So that's my view. And that's kind of where we're at. The only trade that I'm looking likely that I have placed is euro dollar long at the moment. And that doesn't look likely anytime soon, but that can change very quickly also. What I would say is there could well be a better entry here. And I'll show you what that's going to look like before I leave you. If price were to come down here and hit this trend line or trade line, both, maybe hit this level, a bit of consolidation back above and retest, then I'd be doing exactly the same thing. This trend line's telling me that we're not done. Sorry, the shorter term, that we're not done with this area just yet. So we're getting too many tests and nice frequency. So I'll be looking for that to happen. Short-term bull, euro dollar. There you go. And that's me, Ash, for the day.
Great stuff, mate. All righty. Just doing one thing here. Okay. Right, fantastic. Well, let's call it a day, mate. We will be back, obviously, next week. Back tomorrow, as always. So we'll have next Monday off. Yeah, that euro dollar. I would have been with you on that, Lewis. Actually, I do like it, but as Jeff says, that's not the technique he's following. But I think it did look quite interesting, didn't it? We'll have a good deep dive into the into the euro dollar. It looks quite interesting at the minute.
We'll dissect it this time tomorrow. We'll come back and have a look and see what's happened.
Yeah.
What may well happen, of course, is we'll come back and we'll be in here somewhere.
Yeah, I think it did look good. I mean, it was a lovely on the 30-minute chart. That was a lovely high test bar after pushing into that trend line. That's what I was looking at, pushing into that trend line and then seeing that bar come right the way back in again. I mean, obviously you got a wider trend line now, but the initial pattern with that smaller trend line, and then you got the high test bar there, and it's actually playing out the way that the pattern certainly suggested.
Absolutely, you got it right if you got in there. No question.
Yeah, looks pretty good. Let's dissect it a bit tomorrow, mate. We better get out of here. Thanks again for all of you for coming in. Thanks, Angel, for all your work, and thanks to you, buddy. And I will see you in the morning.
Cheers, mate. Thanks to everyone. We will catch you tomorrow. And from me.